Hi guys, what's up? John here, taking a quick look at the market. It was a very interesting week, OPEX week, and you can see that we have finished red or negative, but the market is still trapped in this sort of sideways area. In the last few weeks, we've actually sort of gone and created what I would be calling a bullish flag. So we are still stuck in that tight range. Now, a few weeks back in March, we actually started creating these new higher lows. Low there on the market in March, higher low in April. There looked to be another higher low there in May a few days ago, but we have actually failed there and we are headed lower. But what is important that since August 2010, the market has been clearly in this nice bullish upwards channel there, if you draw those lines in there correctly. So at the moment, even though we're trading sideways, we could actually come down and touch this line. That would be a critical point for the market to see if we actually do get some sort of bounce there, or we do follow through and break through and sellers come back into the market and we head down a little bit. But when you see a upwards channel or this pattern developing here, that is not a bearish situation. We are still in a bullish market. But now OPEX is finished, the week is through. It will be very interesting to see what happens next week on the market. So we will be actually watching that quite closely. The other interesting thing at the moment is a lot of the attention, a lot of talk about the US dollar. So let's now go over and take a look at the chart there and see what's happening. Now, if you want to take a look at why commodities at the moment are in such a lot of trouble, it's not because there's a lot of selling off happening there. It's because the rise in the dollar, everything is revolving around the US dollar at the moment. It's critical to watch this chart if you want to stay 2 steps ahead of the other traders out there. And just look what's happened over the last month or so in the US dollar. We've seen a significant rally up higher. But before we go into analysis, it is important that since June of 2010, the US dollar has been in this nice downward trending market. It's been quite negative. We have seen these small rallies up in the dollar only to be sold off again. There's another one up here, start of 2011, and down it came. But if you want to take a closer look at what's been happening in the dollar, especially since January 2011, it's quite obvious that the US dollar has been in this nice downwards channel here, you can see right now, and we have clearly broken out here at about the $75 mark, and it was around this point that commodities really did take a hit. What is important you have to remember here is that if the US dollar goes up, the indices normally come down, and that's what we have been seeing over the last couple of weeks. And it's further adding pressure to the commodities. And unfortunately, in the charts at the moment, it looks like it wants to go up and create a sort of bullish flag on the market. Now, we're still caught in that range, but if we do get a break, to the upside here, the US dollar is likely to go up and the indices and commodities are likely to suffer further. Now, like I said, there's no guarantees. We're still in that range, but I would be looking for a break out of this range to head a little bit higher. Otherwise, more sellers will come into the US dollar and we will start to head back down, and obviously that's going to add strength to the S&P 500, the indices, and the commodities will see some sort of a bounce. Very interesting time on the market. That's the analysis for the 21st of May 2011. Don't forget to check out our new Futures Trading Club. That's www.forecastfortomorrow.com/trading-club for more regular updates. This is John. Thanks for watching, and I'll talk to you all next time. Okay, bye bye.